Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus will be on the Lupin Earnings, the Indian multinational pharmaceutical company that's witnessed an increase of 52% in the net profit to 359 odd crore rupees from 236 crore rupees that was recorded in the corresponding quarter of the previous year. The total revenue from operations have also grown to 4,961 odd crore rupees. That's up 12% on a year-on-year basis. The EBITDA has jumped 72.5%, very substantial move there to about 996 odd crores in the fourth quarter, and we've also seen that the margins have also expanded very sharply. Now, to discuss with us the key insights from the quarterly earnings as well as an outlook going forward, I'm now joined by a very special person, the top management of the company. Mr. Ramesh Swaminathan joins in. He's the executive director and the global CFO of Lupin. Warm welcome to you, sir, on Business Today Television. It's a pleasure to host you with us. Now, talking about the earnings, if you could highlight for us strong numbers there on a year-on-year basis on all the parameters, what really contributed to the growth this time around?
We have been focusing on, in fact, top line buoyancy for the last several quarters, and with the release of kind of products that we did over the last several quarters, that buoyancy has kind of continued. There has also been tremendous focus on, in fact, gross margin, and that was focusing on the cost in terms of potentially alternate vendor strategies, on routes to synthesis, and the like, and of course focusing on other lines below that. Essentially, when it comes to the manpower associated with, in fact, factories and R&D and the like, there has been rationalization which happened in the last several quarters. We've been focusing on productivity of manpower at the R&D level, at the factory level, and the like. All of this have actually borne fruit, and there were quite a few inefficiencies in terms of supply chain, in terms of inventory write-offs and the like that we identified and worked on. And the fruits are there to see. So the last 5 quarters, you've seen continuous rise in margins from an EBITDA perspective, and landing up at around 20.4% this particular quarter. But that said, the core margins for, in fact, a lot of our competition is actually at least a good 2 to 3 percentage points ahead of us. And our next target would essentially be to kind of breach that gap and get there. I would also like to kind of flag up the fact that there are adjacencies that we started off, as in the case of digital, as in the case of diagnostics, and we've spun off our API CDMO business. We've got a CDMO business. We've got the biosimilars business, which is also not taken off from a earnings perspective. We're focusing on getting all of this right, and once we do that, you would actually see another 2 to 3 percentage points slip when it comes to EBITDA margins.
Okay. So also if you could highlight for us your blockbuster asthma drug Spiriva, what was the contribution in this quarter of this drug, and what is the potential growth that you see in FY25?
The buoyancy that you see in America is principally because of a realignment of our strategies to accommodate, in fact, a lot of these respiratory products, and they constitute close to about 40% of our turnover there. We don't talk about product-wise revenues, but for sure it is actually a fairly large stay, and I just given you that, and very good profitability given the fact that they're fairly addictive when it comes to, in fact, price. There was, of course, price pressure in the past, at least insofar as the industry is concerned, which has been contained in recent times.
I'd like to now ask you, sir, about the EBITDA margins. Like you pointed out, a substantial beat on the estimates by almost 8% that the street was expecting, from 13% to now you're over 20%. Is this sustainable, sir? Would you like this to be the band that you would like to hold on to for FY25, or do you think there is a potential capability that you can also build onto this kind of margin?
I just answered this a couple of minutes ago when I spoke about the fact that this margin is there to stay, and is actually a result of, in fact, buoyancy on the top line and tremendous focus on the cost front. We also recognize that it's still lower than the competition, and there is still more work to be done. And therefore, to that extent, we need to be working on improving the core margins to 22-23%. And that would also come in after we look at bespoke strategies for a lot of the adjacencies that we created.
Okay. So as far as the US business is concerned, could you give us a sense of how is that shaping up for FY25? I think initially you had guided for about 210 million dollars per quarter kind of a growth that you would be able to see. Is that sustainable? Do you see that perhaps increasing from those levels too?
Yeah, I think it's very well will be sustained, for sure. Given the kind of products that you're focusing on, and the respiratory portfolio, as I said, is about 40% of our turnover in America. There are a number of products that we have brought, which we have brought in this year. We have Mirabegron, which is of course there was an injunction passed against it, which we would, once it is removed, bring back to the market. There's doxycycline that we brought to the market again a few days ago. And there is a continuing sustenance of, in fact, the products that we already have launched in the respiratory front, and of course the inline products that we have on the OST and the like. A run rate of 210-20 is certainly fairly sustainable. And that would actually see us kind of sustaining the margins as well.
Okay. So also if you could share with us the plans for your new launches, which may be planned for FY25, and the potential revenue contribution from your new launches.
I don't share product-wise revenues, but I did indicate the fact that we have Mirabegron, doxycycline, and if the litigation goes on successfully, we would be looking at Dosperinon, Slind, really. So there are decent products that would come up in 24-25. Next year is a big year with Tolvaptan and the like, and thereafter there is going to be the sustenance of the respiratory products, and injectables portfolio will blossom with the products like Risperdal Consta, Ganirelix, we have liraglutide, semaglutide, and the like.
Yeah, absolutely. And as far as the India business is concerned, how is that likely to grow in FY25, sir?
I think at least a good 25 to 30% above the market is our target. Even this year, minus if you look at the one-offs and potentially looking at the loss of exclusivities on certain parts. If you were to, we would see that we have actually been able to sustain a 25% growth rate. We're fairly strong when it comes to our cardiovascular, diabetes, respiratory, and that's been the focus. But getting stronger in GI, the vitamins and the minerals front, and the women's health. So those are the focus areas for us. And there's tremendous potential to actually improve upon those.
Okay. So also, as far as the debt on the books is concerned, sir, where are you at currently, and where do you foresee for FY25 you would like to be? Is there a target of being a net free or achieving that net debt free status as well?
We have been continuously working on, in fact, improving our overall, balance sheet attractiveness. And as if you look at it today, we actually have, in fact, a minimum debt on the balance sheet, just about 500 crores, and we'll be virtually debt free by the end of this quarter. But having that, there are also possibilities of acquisitions and the like. We are very active as a business, and we believe that trading on equity is important. And from that perspective, debt is something that we would like to. And this is going to be really based again on the kind of acquisition targets that we look at.
Okay. So, sir, are there any other acquisitions planned for FY25? And if at all, yes, then which are the key segments that you will be looking at?
We would like to look at interesting propositions in India, as long as it is at a cost which is reasonable from our perspective. Equally, we are interested in at some point of time getting into specialty in America and other parts. And as in when the proposition presents itself, we would be looking at it seriously enough.
Okay, fair enough. Thank you so much, sir, for speaking to us on Business Today Television and sharing all these insights from the quarterly earnings. Here's wishing you all the very best for the upcoming quarter as well, so that we can get a better understanding as to how the company's vision is growing along with the industry trends. Many thanks.
Thank you very much.
Thank you, sir. And with that, viewers, we wrap up this very special conversation with Lupin, company aiming to be virtually debt-free by this quarter and continues to open up as far as acquisition opportunities are concerned in various, industries and sectors as far as India and also in America is concerned. But do stay tuned onto Business Today Television to catch more insights from the quarterly earnings that are being reported by the top firms which are listed on the exchanges that we continue to get you on Business Today.